Hello there, Maverick traders, and here we are, the last week of trading in 2023, and then we close the books on 2023 and we look forward to 2024. This is Rob Reinhold. I'm joined by Ankit Sharma, last currency room of 2023. In this session, we're going to look at the previous week. We're going to break down what happened, some of the news, and then we're going to get into our scoring. We're going to score all of the currencies, all of the crypto, and then we're going to pair up the strongest versus the weakest, and those are going to be our trades.
Disclaimer. This video was created for professional Forex and crypto traders. Maverick Currencies is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional Forex and currency trader for Maverick, click the apply button in the video description. Let's get ready for next week.
Last week, the equity markets, they stayed bullish. Now, we've been very upfront and very bold on this call that this market is going to keep going up. It's probably going to float up. We called it a melt up through the end of the year. Look, we have no idea what's going to happen when January comes, but we do know that we had so many seasonality patterns in our favor. It was an easy call. And in fact, we are going into what is called the Santa Claus rally. Now, what the Santa Claus rally is, it's the 4 days, the last 4 days of the year, and the first 3 days of the next year. These 7 trading days have a very high win-loss percentage, or odds of being positive, and a very high return rate. This is the best 7-day period of any other time in the markets, statistically speaking. Now look, seasonality patterns, we look at these over, the last 50, 100 years. It doesn't mean that this 7-day period is going to be amazing. It doesn't mean it at all. We have no idea what's going to happen in the next 7 days. But what we do know is if we were to make the same bet, is to be bullish for these 7 days, and we did that for 50 years in a row, we know that we would be happy with our decision. So look, it doesn't mean for sure that these next 7 days are going to be bullish, but we do know that the odds are in our favor that they are going to stay bullish. I don't see any reason why we don't have a Santa Claus rally this year. And we've been talking about the rally that the yen has had in speculation that the Bank of Japan was going to end their ultra-loose monetary policy. Well, they didn't do that. They didn't really do that, and it actually disappointed the market a little bit, and the yen fell for about 2 days. And then all of a sudden, the yen turned back and actually ended up closing well off of the bottom for the week. We have seen the 10-year bond fall below 4%. We got more inflation news. We got more inflation news out of the US that inflation is falling. So we got the core price PCE index. This is the Fed's favorite inflation number. And take a look at that. It's down to 0.1%. That is a very low point of inflation. I think the Fed can signal that they have won the war against inflation, and they can actually start to talk about cutting rates. We also got the CPI out of Canada, and it was higher than expected. However, these numbers, take a look at the numbers. Let's really look at this in relation to where we were. Worldwide inflation was running somewhere between 6 to 9%. So Canada is now down to 3.5%. It's going the right direction. So the CAD did have a little bump on this initially, but it didn't really hold because everyone understands that inflation is coming down. If you take a look at UK, we had the UK inflation. Look at these numbers, 3.9%. Remember, we just heard from the Bank of England last week, and they were a little bit hawkish. They were talking about not cutting rates and maybe raising rates. This number completely cuts the leg out from that argument that inflation is coming down very quickly in the UK. And then take a look at stuff like retail sales. The economies continue to do well around the world, especially the consumer. So it's one of the reasons why we see this equity market keep melting up, because the economies are doing quite well and inflation is really looking much better and interest rates are coming down. That is a Goldilocks scenario for these markets. So let's just take a look at the numbers last week, and then we will close the books on last week's numbers. We take a look at the numbers here. We've got the S&P was up 1%. World Index up 0.5%. Crypto had a great week, up 5%. We'll take a look at all the charts here. And then commodities also had a great week. Oil, that's been really hit all the way down to the low 70s, it's bounced back up to the high 70s, giving it a little bit more bullishness than we've seen lately. Let's focus on this chart of the S&P. Now, there was one day this week that was a nasty, nasty day, and that was Wednesday. The market opened up, and it held in pretty well for about the first half of the day, and then all of a sudden, it tumbled, and it tumbled hard. We went from being up about 0.3% to closing down 1.5%. It just was a really, really quick sell-off, and then you can see the next 2 days, we've recovered all of those losses. In the end, this was an up week. 4 up candles, 1 big red candle. Expect to see this kind of market activity going forward. This is typically what we see in August trading, where we see the market grind higher, 1 big day down. The market grind higher for 4 more days, 1 big day down. So it's a choppy run higher. You really want to be a buyer on any nasty, ugly days in a market this strong. So this market is a solid +3. This is the most bullish we can get on equities with our scoring system. Let's take a look at the performance. Someone called the Swiss franc and tell them it was not supposed to do what it did last week. So the Swiss franc actually was the best performing currency last week. Ankit, do you have any reason of why the Swiss franc would have done what it did last week?
Absolutely not. And I must say that, Swiss franc is one of the currencies that has been tough to figure out because, traditionally it's a safe haven currency, but it goes up when things are rough and then it goes up when things are really doing well. And we talk about the whole European currencies not doing so well, but then we have Euro underperforming, but that divergence between Euro and Swiss franc continues to grow. So I think that's really where we are. It's hard to explain because it's not falling in any bucket, but it's just doing its own thing. I think that's how I can sum it up.
I think we can take these middle 4 currencies. Take a look at these middle 4 currencies, and I want you to just think to yourself, they're messy. They're really messy. They're sloppy here. I think you want to avoid these 4 currencies. I think you want to play over here. I think you want to play with Aussie Kiwi, and I think you want to play with dollar and yen. Now look, dollar to me is a clear sell, and I still like the dollar short. Yen, even though it was the worst currency last week, I still like the yen better to the long side. So I think you want to be taking a look at a couple of crosses here. Aussie Kiwi versus dollar, and then dollar versus yen. Those are going to be the ones that I'm going to be focusing on here in this session. But outside of Forex, crypto has been a one-way trade. It's been a much easier trade. We talked about how we've liked Bitcoin and Ethereum the best, and they have continued to perform the best. Stay away from Litecoin and Bitcoin Cash. It's clear where the leadership is in the crypto market. So let's jump in and take a look at where we are right here, right now. We are at a +3. We've already looked at the S&P. The S&P looks super strong. Here is government bonds. And again, we have gone from 5% down to below 4. And look, there were plenty of chances for this bond to bounce this week, and it didn't. It based. This is a base. And again, when it bases, it means that it's weaker than normal. So for me, I'm looking at this bond yield saying this is very supportive of higher stock prices. And take a look at cryptos. We had this nice pullback to this nice little hammer here. And look, this was a messy pullback. You didn't know where it was going to bounce. But you can see now it's starting to clear out of about a 3-week period where we pulled back and we just hung out here. I need to see a little bit more bullishness for me to get even more bullish on cryptos, but it's definitely showing that it wants to head higher as well sometime in the future. Take a look at this calendar. No, there is not invisible ink on it. This is just the calendar of the last week of the year. So let's talk about this week. This week, The markets are closed on Sunday and Monday for the holiday. The markets are going to open up at, Ankit, was it 6 p.m. or 7 p.m. Eastern Time?
That'd be 7 p.m. Eastern.
All right, so the markets open up 7 p.m. Eastern Time on Monday night. Obviously, that's not going to be a great time to trade. Spreads are going to be wide, volume is going to be low. So really, we're taking a look at this market really being a Tuesday to Friday market next week. And we aren't expecting there to be great movements. There's going to be low volume, which typically leads to low volatility. So this is not a week to go crazy. This is a week to be very, very diligent and only making maybe one trade for the week. So I think you got to be super, super cautious about what trade you're making this week, because I think there's going to be a lot of chop. Where do you focus? Well, let's talk about cryptos, and then Anka will take us through Forex. To me, cryptos, this is like a perfect week for cryptos. Just think about this. People after the holidays, they maybe have some extra money, or maybe they got some money, or maybe they didn't spend enough or spend as much on presents. They're going to put it into crypto. I think this is a really good week to be long crypto. And you can see Bitcoin is in a really nice 1 month high base. It's gathering steam, ready to break out. I do like Bitcoin on the long side. I think you want to stay away from Bitcoin Cash. It's underperforming. Just stay away from it. Ethereum also starting to build after this 1 month base, starting to build some momentum. A breakout above 2,400. I think that's a clear signal to be long on Ethereum. And then Litecoin, same thing. It's underperforming. Totally ignore it. Just totally ignore it. Bitcoin and Ethereum. Look, I typically favor Forex trading before I look at crypto trading. This week, I'm actually favoring crypto trading. I think it's a really good setup this week for higher prices on crypto. Ankit, will you take us through Forex? And before we go through Forex, will you give us your opinion on crypto this week?
Absolutely. Let's just start with the US dollar. And again, everything is pointing out to the dollar to the downside. And again, this is always the best trading setup to trade, where trend score and velocity score, it just lines up. Both charts looks identical. So it's just a matter of taking some pauses in between, but it's clear on the direction. So as we end up the year, everything I think is pointing out to the downside. Further downside, there's no sign of reversal or capitulation. So I think this will continue going into next week. So that's pretty clear. Now, looking at the yen, not so clear, because again, this week we had this anticipation going into the Bank of Japan meeting, and again, it didn't fall with that expectation. But if you really look at it, it didn't really fall apart, and that's a good sign. That's a good sign that even though the news was not as expected in the past, we've seen the yen will just fall apart after that. It didn't happen. So we'll see what happens next week. Like I said, I'm kind of right in the middle there. I'm not super bearish on the yen, and I'm not really super bullish on the yen. I'm right in the middle. And we'll see what happens as we go into next week and the following week after that. So that's where we are with the yen. And let's talk about the European currencies here. And again, Swiss franc, you can see that we just literally crawled up. It went from a -2 to a +2. And even though the price is flip-flopping here, you realize on the daily chart we are right back at the resistance. And we're getting a lot of those shadows on that candle, not so clear price action. So just use that, keep that into consideration. I mean, I'm not really super bullish on any of the European currencies. I think we can do better pairings with the dollar and some other currencies. Now, euro, you can see it's clearly basing here. And this is, again, one of those situations where it's just not the dollar that's just so weak. I think the euro is in the same category, hasn't broken down yet, but this is something I'll be keeping a close eye on for a further break below that support. So that could last for another week, but again, we're looking for that ultimate break. And talking about break, I think the British pound did break lower. So you can see how this thing is not falling apart, but it is following a similar direction as it is with the US dollar. So both the dollar and the pound looks really weak to me. Score is a -2 and a -2, and the trend score on the US dollar is -3. So see, they're all in the same category. but moving averages are turning lower. I think this is setting up for a new short. So something we'll pay attention to next, not maybe not next week, but I think we'll probably see that in the first part of January. Now we are looking at the CAD, and interestingly, CAD has deviated from the US dollar. And that is a change. I know for a lot of traders, you spend a whole year looking at this positive correlation, and you get this time to time where they do deviate, and that's exactly what we're getting. Dollar CAD has fallen very nicely from 138 just a month ago now to a 132.80. That's a big drop. So dollar is falling, but the CAD is holding steady. I think dollar CAD has been a decent pair. But this is, again, not going anywhere. So we'll have to reevaluate this in a week. I don't really love the CAD long. I think there's better out there that we can pair against. Now, talking about growth currencies, and it's pretty clear that the Aussie is the benefactor of this move during this holiday season. Again, we always see this, either the Aussie or the Kiwi will take turn from each other. And right now, what we are seeing is that run in this Aussie over both the velocity and both the trend score. So I think that's the one probably continue on going to next week as the market's likely to stay strong. And lastly, the Kiwi, which again is just lagging behind it. It's not weak, but it's just not running either. I know it has a +2 trend score, but with the velocities, you can see the last 24 to 48 hours has been just sideways. So I would rather be Aussie, and I think I've looked at my pairs. Aussie against the dollar, Aussie against the pound looks great across the board.
Well, thanks, Ankit. I do agree that the Aussie looks the best. I like the dollar short is definitely the #1 call that I have. But as I said, I typically look at Forex first, and I kind of look at cryptos on a secondary basis. This week, I think the setup in Bitcoin and Ethereum is really good. In a quiet week after a holiday, I just don't see anyone selling Bitcoin, Ethereum. I just see people buying Bitcoin, Ethereum. So I actually think that this is a better trade this week than any of the currency crosses. But the best currency cross, in my opinion, it is Aussie dollar. Aussie versus dollar. You could take a look at pound versus Aussie as well, but I think that Aussie dollar is the one that I'm going to be looking at the most. What is moving right here, right now? Again, velocity score. You can see Ethereum has the most velocity of the cryptos. So I think at first, if you're taking a look at early next week, you want to take a look at Ethereum, and you can see the Aussie is the best of the Forex trades here. Let's go ahead and take a look at some trades. And look, we're not going to spend a lot of time because, look, we want you to be trading less this week, not more. I'm just going to take a look at Ethereum on a setup, and then Ankit, you can take a look at Aussie dollar, and then anything else after that, and then we can wrap this up. My focus is going to be on Ethereum. Now you can see here, we had a bit of a pullback, but really it's more of a base. It's more of a base here than a pullback. If you take a look at how much we ran, we didn't pull back, all that deeply. We didn't even get back to probably a 50% Fibonacci retracement. So to me, this is like a high base / bull pullback. But this is the real point I want to be pointing out here is that we came up to this level. We came up to this 2330. We hit it back here, and then we bounced off. We're right here, and you can see we're bouncing off a little bit here. To me, I don't want to buy it right here. I want to see it possibly fall back a little bit and then get some steam and then give me a nice candle above it. Now, here's the problem. We do have some more resistance up here at 2380 to 2400. Somewhere in this area, we're going to have some resistance. So I think it's very tough to buy it here, knowing that you've got some overhead resistance right above it. If you want to maybe take a half a position before, when it breaks out of this area of 2330, a half a position, and then another half of a position if it breaks out above 2400. I think that's the best way to play this because I don't want to take a full position in here when I know there's overhead resistance right above it. So I think you've got to really think about how you want to play this and where we are in the cycle. So that's the trade I wanted to go over. Ankit, we go over Aussie dollar and then we can take a look at something else.
Absolutely. As you can see, Aussie dollar on a daily chart has nicely finally broken out. So uh, I think the next level of resistance at 69 looks reasonable to me. Again, right now, everything is sort of working out. Moving averages are moving higher. So I think that's the next level of resistance before it hit that level where before it will retrace back. Outside of that, pound Aussie is the other one that I really like as well. Any sort of rallies that comes into these, I would love to short. You can see we were sideways for the most part, and for the last 3 or 4 days, 5 days, it has been just moving lower. And there's definitely more downside risk in these currency as well. So these are the two that are on the top of my list here. But outside of that, I don't really have anything else.
And as we said earlier, this is a week to trade less, not more. Look, in 1 week, the first week of the year, it's always great. It's always a great week. All this energy comes into this market, all this volatility. Don't waste a lot of your capital chasing little fish this week. There's not going to be any great trades this week, most likely. The great trades are going to be next week. So just be patient. If there's something there you want to grab, great. But I wouldn't look to be very active. I'd look to be less active. We will see much better trading when we get into 2024. So my advice is to be patient for that, and that's when you can ramp up your activity. Thank you so much for a great 2023, all the Maverick traders. We are looking forward to 2024. And again, we just keep trading. Everyone have a Merry Christmas, Happy Holidays. One thing to note, we will not be doing any videos next week, but we will do a currency room over the weekend. So no end of day videos next week whatsoever. Everyone have a great holiday. Goodbye, everyone.